Well, what a testing start of the week it's turning out to be. 1.25% lower for the Nifty futures alone. We're down about 260 points. If last week Spain wasn't enough with the Nifty hitting that 7-month low, we're now even on the brink of breaching that 22,800 mark. Of course, we'll get in our chartists and talk about whether the pain is going to linger on, given that you've got expiry this week. It's an extended week with Saturday being a trading day and Saturday being the budget as well. So yeah, lots on our plate. You've got the Fed meet as well this week, followed by the RBI meet next. And we're reacting to earnings. So ICICI Bank, clearly, the street is giving it that thumbs up. The leadership position clearly maintained, about 1.5% in the green for ICICI Bank. Britannia is seeing some defensive buying through last week, and it's seeing a follow through today as well. M&M, slight bit of jump up there. SBI, Unilever. But other than that, it's all a deep sea of red. I mean, look at IT. To think of it, IT was one of your top performers from last week. That's completely caved in. TechM, HCL Tech, Wipro, Infosys, they're all your top laggards today. TCS as well, lower by about 2.5%. Shriram is down about nearly 3%. You've got Bharti down 2.6%. And I can go on with the list. And also remember, 18% of the Nifty weightage also is due to report its numbers this week. So it's going to be extremely news heavy, this one. That said, within the broader market as well, the pain is quite excruciating. Look at how hard hit some of the earnings damage has been. Look at an IDFC first, that's down about 8.6%, or for that matter, Laurus Labs, which is now down 11%, given that US has paused the foreign aid, halting the funding for the presidential emergency plan for AIDS. So that stock is taking a knock. ACC came out with its numbers just a short while back, and that's been reacting to its numbers. The consolidated PAT has come in at 1,092, of course, with an exceptional item there, versus a comparable of 200 odd crore rupees. The EBITDA margins, though, was stable at about 7.6, so flattish on a sequential basis as we speak right now. Canara Bank, that also just came out with its numbers. Pull up that stock because that's also reacting quite sharply to its numbers. And the NII has seen a downtick of nearly about 3%. PAT, though, saw an uptick of 12.5%. The stock is cracking 4.5% as we speak right now. But what does that entail about what the future is going to hold? We've got Deepak Shenoy, we've got Naresh Mirani and Kunal Bothra joining in on the show right now. Kunal, clearly not out of the woods. I mean, it's not just the selling abating, but I don't think the selling is also done.
Yeah, the selling is definitely not done because the way the markets are grinding, opening with a gap down, mild bit of bounce back in between through the trading session. But then I think eventually we see the kind of sectors which have been falling. That just indicates that it's a rotational phase which is going on across sectors. A few sectors, they tend to outperform for a couple of weeks or maybe for a few days, but then eventually these sectors eventually get back into a corrective phase and they start to participate on the downside. So it's very difficult to preempt when would this pattern reset itself, and when could we look out for more stability on the indices. What we've done in the process of the last 2-3 days is we managed to confirm a break below its 23,000 mark for the index, and so after 2 or 3 days of trading on an intraday basis, this is a breakdown for the index, and now below the 23,000 levels we could look at 22,500 as the next level of support for the Nifty.
Okay, next level of support, but clearly the pain in the broader market has been excruciating. And to just put it in context, this month so far, while the Nifty as well as Sensex is down 3%, it's the small cap index which is down over 13%. The mid cap index has seen sharp cuts as well. And at portfolio levels, of course, there have been deeper cuts that we have seen, and all of that is actually making it difficult in the market because people are not ready to buy the dips. Deepak Shenoy, the founder at Capital Mind, also joins us on the show right now. Deepak, are you buying the dip, or it's not time yet to do the bottom fishing?
I think, to be fair, I think the markets have gone up quite a bit in the last year. So you're going to see some level of consolidation here. I think you're seeing more in the mid and small caps. A lot of them have come to better valuations. So you can start looking at them in context of their results and then analyze whether they're looking good to buy. I think they're in better shape now in terms of a purchase price than they were a few months ago. But some stocks will continue to fall. I don't think markets are also always going to be only on the upside. So if you have the patience, I think the idea here is to pick up your stocks, build your portfolio, and then be ready for the next upswing. With every downswing, there's opportunities, and then in the longer term, I think if the business fundamentals are sound, a lot of companies will be in much better, at much higher market caps than they are today. So, a temporary fall is not usually a big problem.
Deepak, that's for someone who's looking at adding positions or is sitting on cash, right? But when in mid and small caps, you see your stocks falling about 50, 60 odd percent, that really hurts. What about those who are fully invested in the market? I mean, should they be just booking out right away and waiting for a better, entry afresh?
Actually, Aisha, the people will have investments in all sorts of sectors and large cap, mid cap, small cap, and everything. Sometimes you buy into a stock and you have a position that you're very not very comfortable with because of the valuation. But then when the valuation dips like this, it still remains relatively overvalued. But you find other stocks out there that could be at a much better valuation. You may want to make this shift as well. It's the time to reorganize the portfolio in a way that you're positioned for the next rise up. Typically, the problem is people want the same stocks to go back up. That's a little bit of kind of revenge trading, saying I want to earn from the same stocks I lost money in. But that's not really what long-term investing is about. You're going to think of opportunities, and some opportunities will look just better than the others. Sometimes the stocks you sell are not bad. You might sell, I don't know, like if you sell a large private sector bank, is it a bad sell? Maybe not, but perhaps you're buying into a stock that's going to grow 2x or 3x the private bank's growth. So, why not? So I think it's time to reorganize that portfolio. If you were badly positioned, sometimes it's time to add on if you have more cash. Sometimes it's time to reorganize inside of portfolio, your portfolio weights between mid, large, and small or different sectors. But there is always going to be something to look at because prices are moving sometimes a little irrationally as well. Forced selling for one or leverage-based selling for the other. I think these are just opportunistic times. So it's not just that if you're invested, your only option is to sell. I think it's good enough to reorganize portfolios as well.
It always is. Deepak, hold on to that thought. Lots more to talk about. But before we take a break, just want to, Naresh, quickly come to you as well. Any trades that you've punched in today?
Not really. This is not the time to trade a lot given that we have an event as such. But overall, we are seeing more pressure across the small cap space. So would wait it out.
Wait it out, let the market take its due course and let the poison get out of the system. We'll take a very quick break, come right back. We'll continue our market chat.
Welcome back. It continues to be under pressure for the market right now and clearly not getting abated. In fact, we're at the lowest point of the trading session. Sharp cuts across the board, the frontline index as well as the rest of the market. HCL Tech is down 4%. Tech Mahindra is under the weather. Wipro, Shriram Finance and Dalco, they're all down anywhere between 3 to 5%. Tech, of course, is preempting the kind of move that Nasdaq is likely to see later in the day with that entire threat coming in from DeepSeek. And that, of course, is going to mean that the US futures right now are also suggesting a cut of almost 400 points, both in terms of the Dow and even Nasdaq showing sharp cuts. Deepak, what's your take on the IT pack? Finally, things were looking like they're on a mend, at least commentary-wise, though, of course, the growth rate was still missing in terms of the financial performance. Now, do you think this just adds to that much more uncertainty, this DeepSeek, if you've heard about it yet?
Oh, yeah. In fact, it's been a remarkable weekend for AI. I think this is actually quite positive for India, to be honest, because you see, it's like this. India will find it difficult to invest in the early stage of any kind of a revolutionary trend, right? So when mobile phones came in, a lot of investment went into CDMA in the US. The early investments in GSM were made by Europe. And when India got in, it was like at the point where the technological costs had already been kind of invested in and they were starting to come down. We got in at a much later stage, adopted GSM, though there were other CDMA players. And then eventually the costs in India, we leapfrogged away from 1G, 2G, and even parts of 3G. And then the real growth happened in India when you had 4G. So to the extent that the investments have been made in the US and perhaps in China, India has not participated meaningfully now. But today, when you look at what happened over the weekend, DeepSeek, a bunch of other startups as well, many of them who have bases in India as well, the kind of technological improvement that you're seeing makes it very, very inexpensive for Indian companies to adopt AI, both from non-tech companies that can use AI to adapt in a much better way, and also for tech companies to be able to provide better services using number of models, including open source models that you can run on your own computer. In fact, can be run on a phone as well. More efficient use, perhaps, of even the time when you're inside an aeroplane and not having access to the internet can actually be used to write things or help use AI to help write things better. I think that this change will actually make India more productive at a much more inexpensive entry point. But of course, there's right now fear and uncertainty, and while that happens, prices are going to keep going crazy. But that's the time we should look at opportunities to invest, because if you start looking at adoption from here, you might see that the adoption takes a different hue going forward. Tech companies can benefit a lot more from the offshoring and outsourcing that will probably come our way soon.
Point taken. Let's see whether that outsourcing business does come to India or not. Because right now that China plus one is under threat, in the sense that Donald Trump has gone a little easy on China, at least as of the moment. And people are thinking maybe the tariffs are not going to be as harsh. And that's why the China plus one story might not really work out to that extent. Would you buy that argument, Deepak? And what to do with the EMS, manufacturing, and that China plus one theme?
So I think manufacturing, definitely we are more talking about India being self-sufficient, and regardless of Trump's official position or a sort of semi-stated position, the whole of the US is looking to de-risk from China, and China is looking to de-risk from the US. So it's a both-way thing in a lot of ways. We are like China plus 0.005. We are not China plus one. I mean, we have a long time to go before we come anywhere close. So to the extent that people will still look to diversify away from China, I think that continues to remain in the focus. The problem in some areas, for instance, like in pharma, if America stops funding, the WHO stops the funding of foreign aid programs, a few pharma companies in India who benefit from these programs by delivering drugs to, say, countries in Africa or other places, which are funded by US delivered funds, those will suffer for the time that there are issues with this until the air clears up. So that is going to be a problem. But I don't think this China plus X, and when we are really a tiny portion of X, is going to be meaningfully impacted. There is going to be the threat of tariffs for the next 1 year. And I say the threat because I don't think America is going to act on it meaningfully. If you introduce 60% tariffs in China, from China, America is going to see a major impact, much more than China will. I don't think they want to make China call that bluff. However, there is going to be, in the near term, a lot of uncertainty. I personally think the future for both manufacturing in India, for India, and manufacturing maybe in a little bit of a way for our exports is going to be a meaningful trend going forward. We will, in fact, increase our domestic manufacturing just to make sure we don't have to import from China more than we will be, because we are a China plus one or a China plus 0.005.
Oh, yeah, absolutely. And since you did mention Laurus Labs, we just chatted with the management as well. We had the CEO, Narayan Chava, to try and understand how exactly, does this piece, the fact that US has ordered a pause on foreign aid, which will cause funding for the president's emergency plan for AIDS relief to stop. What could be the potential effect of this on companies? Let's try and understand that.
We don't expect this will have a significant impact on the treatment of the patients who are on the antiretroviral therapy. And for most of the 25, that is calendar year 25, tenders were announced, orders were placed, commitments were given. So we don't expect any short-term challenges. And other important factor to note, US itself is considering rejoining WHO. And there is only a 90-day freeze on the aid. It's not that they are not saying aid is stopped. So the way things are happening, we believe governments will come back. Governments will continue to fund this program by various ways and means, and we don't expect any challenges. We don't expect people will stop buying drugs. So there will be a marginal impact, if at all. We don't expect anything because we have order visibility, order confirmation for the calendar year 2025. So we don't expect any impact Q4 or 3 quarters of the next financial year. We don't see any impact.
Right. Okay. That's the explanation coming in from Loris Labs. The stock, of course, hasn't resurrected at all from there, still languishing by about 11.5%. But Deepak, you were talking about as to where some of the selling has been a little irrational. Where is it that you're spotting value, if at all, in this market, and anywhere that you may have added positions or even bought stocks afresh?
So, Aisha, we're not giving names right now because we're still in the process of buying. But, small cap and mid cap manufacturing companies, specifically those that are manufacturing tools, dies, or other elements, I think those continue to be in favor. A lot of it goes to the auto sector, and the auto sector has been weak for a really long time. But still, we're seeing that that action will continue to grow for us in the long term. I don't believe that these companies will see any kind of a meaningful slowdown because they're not really impacted by AI and stuff like that. They make real things, and in the sense that they manufacture physical goods. And for the most part, these are things that we usually end up importing from China. There is a more a larger theme at play where we're trying to substitute those imports locally. There are maybe some other companies where we're looking at companies, the companies we own in the semiconductor spaces or companies in that entire value chain, where I think having low power CPUs or GPUs that can be used for meaningful AI explorations can change the game for them in the future, because India does not have the capacity to produce something that is at the high end, but we do have capacities at the lower end, and we could perhaps get into that as well. A homegrown GPU that can do AI would be quite interesting to have from a lot of perspectives. So I think these are some of the areas that we're looking at. Of course, right now prices are falling across the board. So even if the company has had good results, it's going to fall. If it has bad results, it's going to fall. So even in the banking space, even in the financial space, we're seeing companies that have announced decent results also not doing so well, with the exception of maybe ICICI Bank, we own that. But we have seen that in general, markets are punishing everything. That gives you the opportunity, I think, if you consider that all this uncertainty is going to last for maybe another month or so, maybe even another week or 2 weeks. It's time to do a little bit of shopping, or at least a little bit of research, so that you can shop when the time is right.
Point taken. So that's the view coming in as far as some of those areas of interest is concerned. But Deepak, is it time to tilt the portfolio a bit towards value versus growth? Because momentum, of course, did very well over the last 3-4 years, but last 6 months have been different. Is it the change in the tide completely, or was this a short-term phenomenon?
So even value makes money only when there's momentum, to be honest, because it's momentum that drives up valuations, even of companies that were typically value companies. So I wouldn't say, sometimes you'll find value is an interesting point to start with, but you need momentum in the end for it to make lots of money. So whatever your style is, whether it's momentum or value, I think the idea is to stick to that style, because that's what makes you more comfortable. A momentum player will probably be starting to build a lot more cash buffers right now, which is fine. That's the style. They're going to underperform when the market is not doing well, and relatively outperform when the market is starting to do well. So that's the style. A value player will probably pick up stocks when they're at substantially low valuations. Sadly, the value stocks that are typically value are still overvalued compared to when they were great picks in the past. Even the defense PSUs used to be at 8 times earnings and 7 times earnings. Even now they're at 35 times earnings. So I don't think the traditional value pack is value anymore. But there are definitely pockets of value emerging. You're seeing solidly good companies, where the stocks have fallen maybe 25 to 30%, where you start to see some points at which you can pick up. I think it's style dependent. It's about investors. If you can switch between value and momentum the way you want, then you might consider looking at value stocks. But I think stick to your style. The discipline is what makes money in stock markets.
Deepak, on that note, we let you go. Let's see which style really works out from here on. But what really needs to be watched out is the US markets right now. The Dow futures is down 460 points. The Nasdaq future is down 676 points. A 3% cut is what the futures on Nasdaq are indicating at this point of time. That AI bit has definitely rattled, rattled the tech giants of US, and that's the reason we are expecting a sharp cut on Nasdaq when we start the trade, and perhaps we are preempting a bit of that. We've already seen a cut of 1% on the mainline index. A quick break and we'll be right back. Welcome back. Well, the fall in the market is accelerating right now. With 5 days left for the budget, it's going to be a longish kind of week for us. Usually we look forward to truncated week, but this time it's going to be 6-day working week. And if Monday is any indicator of how the rest of the week is going to pan out, there's a lot of red on the screen and it's going to be a painful one until unless we see that bout of short covering that everyone has been talking about, because just ahead of budget, that's the positioning that we have seen. Maybe the street is expecting some big bank announcements in the budget, which might not be that favorable to the markets, or we'll reverse the course. But something does need to happen because India VIX has shot up quite materially. We're now past the 18 level. This week, of course, there's a Fed meeting as well, and that also adds to the nervousness. But with just 5 days left for the union budget, we take a look back as to how the historical trend in the market has really panned out a week ahead and post of the budget. Ansh is joining us with that analysis. Ansh.
Right, so we have quality data of last 12 budget, and as per that, we are seeing that in last 12 budget, Nifty has moved positively 7 times before the budget and negatively 5 times after the budget. However, post-budget, the story changes actually. It has been positive 6 times and negative 6 times, showing a mixed bag of sentiment. Now, if we talk about some interesting highlights, then the biggest rally post-budget came in 2021 with a 6.2% jump in just 2 weeks. On the flip side, 2018 witnessed a sharp fall of 4.7% after the budget. Now, if we talk about averages, then pre-budget Nifty has moved by an average of minus 0.7%, and post-budget the average move is slightly positive, which is around 1.2%, indicating a cautious optimism. Now, if we talk about the volatility, then on budget day, Nifty's volatility shows that on an average, Nifty has moved around 2.5% on budget day. The highest was in 2021 with a 5% move, while 2024 was relatively quiet at just 0.8%.
Something different. That's the view coming in on budget and markets at this point of time. But Devang Mehta also joins us on the show right now. Devang, what to do with the markets right now? It's just red on the screen and red across portfolios.
I think, yes, clearly there is a lot of red on the screen, as you rightly said. But one thing that remains very not philosophical is that you can only focus on your control levels, right? So the market behavior is right now not under our control as such, and we know there are a host of factors which are bringing in not only volatility but also uncertainty, which is quite unnerving for the participants as well. And what is adding fuel to that is, of course, the Fed meeting which is scheduled for this week. The upcoming budget, which normally very famously people talk about that it will just be a non-event, but honestly, this time around, there is a lot of expectations that is riding. Otherwise, a lot of good work that has been done by the government to sort of give capex a boost will be undone. So I think a lot of things are required. One, on the capex front, a good budget of 11.5, 12 lakh crore, and the road ahead for the capex, which was not done this year. Also, consumption needs a little bit of boost. So I think, yes, people are going with a lot of expectations also into the budget. There has been a sharp correction to the tune of 14-15% on the markets, and mid and small caps have corrected big time. But honestly, for somebody who is looking beyond 1.5, 2 years, this is honestly an opportunity in adversity. That is what I can right now say about the markets.
The take coming in as far as the market setup is concerned. But Naresh, any pockets of strength, if at all? I understand you're saying that one shouldn't trade right now, but select name from real estate, the likes of Sobha, DLF are showing signs. Macrotech is up, albeit 0.5%, but still. And then FMCG has been bouncing back because people are looking for perhaps defensives right now. So Britannia is one of your top gainers. HUL is doing well. Is it time now to look at some of these names?
So, in terms of relative strength, where we've seen is something like a Bharti Airtel Telecom, which has not fallen. So, Indus Towers also has not corrected. It's been holding on to the recent lows. So, that is one pocket. FMCG, for the fact that they've corrected 20-25%, and post numbers also did not see a sharp correction on the downside. So, they could be making a base out here. So, these are two places where there is a base formation. IT was trying to hold on, but after today's move, which could happen in NASDAQ, that could also take a hit. So for now, telecom is the space which is there. Then there is large cap banking, which has taken a pause, which is where you look at a Kotak and an HDFC Bank, but they've been on a pause for the last 4 or 5 years as such.
Right, okay. Well, FMCG seems to be that one hiding place. Other than that, of course, ICICI Bank is holding out. M&M is finally seeing some buying. But Naresh, is it looking like conclusive? Because M&M too did fall in the last 10 days.
If you look at it, has been a relative outperformer all through the last few years. Now, in the near term, also corrected from 3250 down to 2750, 2800. Now, till the time it holds above those levels of 2700, 2750, which has been the low for the last 6-8 months, that would imply the stock is forming a consolidation and not taking a breakdown like other names. But overall, if you look at the whole auto pack, some names which corrected have not seen follow-up selection in the last few days, whether it is a Hero MotoCorp or Bajaj Auto or even Eicher Motors or Maruti, which is holding on. So auto seems like a space where either it's consolidating or stocks that have fallen a lot are making a base for a bounce back.
Right, okay. That's the take coming in on M&M right now. But Devang, hi afternoon. What else is looking like it's finally corrected enough to get into value zone? Anything that's looking interesting for a buy right now?
Actually, yes, I think the fall has been across the board. If we it is time to hide into defensives. I think the correction has been so large as such because in the last 4 years, we have not seen correction to more than 5-7%. And this time, the stocks have also corrected 10, 15, 20, 25, 30, 40%, some of those. Ideally, yes, I think it's not a time to hide in defensives. Rather than that, probably just phase out your investments over the next 1 month because you will have the end of the earnings season. You will probably also see the budget as well as what Mr. Trump does in US. I think, yes, there has to be a list of at least sectors and themes first. So if I can mention certain themes, engineering still looks very interesting. I know it's a huge ambit of job that engineering covers, the industries that it covers, but a lot of manufacturing, engineering, power automation type of businesses, capital goods, which were not correcting, which has seen a one-side rally of say 20, 30, 40, 50, 80, 100. Some of these businesses have become even 3x, 5x over the last 4-5 years. Semiconductor related businesses, there are warehousing related as well as data center related businesses, which are proxy plays. So a lot of these companies, yes, in the mid cap and the small cap domain, where there can be still an exaggerated fall of the next 5-7%. But ideally, these are businesses. I think I'm not a fan of people saying that the industries would change, the sectors would change. I think probably if India's GDP is going to grow fast, these are themes which have to come back with a bang. So ideally, yes, you have got price correction, you got valuation correction. Most importantly, are the businesses still doing well? You have to listen to the commentary of the managements over the next couple of quarters. But these are the businesses or the themes which we would strongly suggest.
Those are some of the themes that you are recommending of the trading session. It's been a tough day for the market participants. Let's see if the last 15 minutes bring in a sigh of relief or not. We'll be right back after a short break.
Back with closing trades right here in ET now. The fall continues, 1.25% lower, 255 points lower is where we're currently at. Already breached the 22,800 print and come back smidge from there. But today's weakness doesn't seem like us alone. I mean, not as much Asia, even though the Asian markets too turned tight. I mean, just think of it, Shanghai, when we came into trade, was marginally positive. It closed in flat. Hong Kong managed to, latch on to the gains, but again, fell off from the top. And Japan closed in definitely with losses of about almost 365 odd points. Europe, as we speak right now, is bleeding red. It's about 0.5% to 1% kind of cut that you're seeing across the board. Tech stocks are the ones which are really nosediving on China competition fares. What about the US futures? Let's check in on that as well, because there too you're seeing a very, very sharp crack. Nasdaq is now down 700 points, and this is just the futures rate alone. We're looking at an over 3% decline already and staring at a 118-point cut for the S&P futures, equating to a good 2% fall, and 390 points knocked out on the Dow futures as we speak right now. So sure enough, it's going to be some fireworks when the US markets open for trade. But a big boost coming in for the agri sector. The government may hike credit target in the upcoming budget is what we are learning. Prakash Priyadarshi joins in with more details.
Yes, government is likely to provide impetus to the agriculture sector in the budget. We are given to understand that some significant announcements are likely to be made. Sources are indicating that the government may increase overall allocation for the agriculture and allied sector, which is likely to be increased by 10%, and the overall allocation may be hiked to rupees 1.65 to 1.70 lakh crore. In addition to that, Ministry of Agriculture has sought higher allocation for flagship schemes such as KCC and PM Fasal Bima Yojana, where Kisan Credit Card and PM Fasal Bima Yojana may be made more lucrative in order to attract more farmers and provide them additional benefits. Along with that, overall allocation for fisheries, animal husbandry and dairy likely to be increased to rupees 10,000 crore from rupees 7,000 crore for FY25. So it's a very significant development coming in. The second aspect of this whole development is, of course, with regard to agricultural credit. We're given to understand that the government is likely to increase agriculture credit target by 15% from existing 27.5 lakh crore, which is set for financial year 2025. A very significant development coming in, and the government is expecting higher domestic consumption, rural consumption by allocating additional target. A very significant development coming in, and of course that is expected to generate more jobs and rural demand going forward.
Okay, so that's what is lined up for the agri sector from here on. But back to the earnings, because that's been impacting the market mood. IDFC First Bank is down 9% in the trading session. Hear out what the management told us earlier, because there was a definite pressure when it comes to the unsecured side of the business. But what else is lined up? Hear out the management.
Our gross NPA has peaked to 4.5%. SMA also has increased to 4.5%. We think that this quarter, that is Q4 FY25, we should see our own assessment at this point of time is that we should see the peak of it, and then Q1 26 should be, our provision should be less than Q4 25, and then every quarter after that it should come down. That's our assessment at this point of time. To an extent, the cost to income ratio also a little elevated because the microfinance business is slowing down, and the income from that line is also missing. When you say cost divided by income, the income line itself got a little affected. Every business is built for profitability, and every business, as they scale up over the next 4-5 years, definitely cost income ratio will come down.
Okay, so that's about IDFC First Bank, but we're also watching out for the earnings coming in from Bajaj Auto. Let's take it across to Shrishti to get an understanding what to expect from the company. Shrishti.
Well, this time from Bajaj Auto, we are not expecting much. Why so? Because on the volume front, they were not that supportive, because the domestic volumes in the two-wheeler segment have actually declined 1% on a YY basis, while the three-wheeler volumes were supportive, and so was the export volumes, which have seen an uptick of 22% on a YY basis. But the overall mix wasn't that great, and that has actually impacted the numbers, though on the average selling price, we have seen a jump of 6% on a YY basis, which could actually support the numbers a bit. If If we talk about the top line, 12,986 crores is what we are expecting. EBITDA expected to be almost flat sequentially. 2,595 crores is what we are expecting on that number. But the key to watch will be the margin figure, because do remember the higher EV sales has been putting a bit pressure on the margin number. Other than that, the export has been doing fairly better. On the flip side, that will actually support the margin figure. So 20% is what we are expecting. Any positive surprise on that front will be taken nicely. If we talk about the bottom line, 2,172 crores is what we are expecting. But apart from the numbers, all eyes will be on the management commentary, how they see the industry outlook going forward, what kind of a growth guidance they give over there. And also on the CNG side of the business, the company has already shared their plans to expand and to grow their capacity in the CNG segment. So how is the company doing there, and what are the plans to get more launches and more products in that category is also something that we will be keenly watching out for. Bajaj Auto on our radar, but let's get in some BTST trades as well going on that note. Naresh, what's on your list?
So that would be a sell on Varun Beverages that's broken down over 6-8 month range. We expect a follow-up sell towards 500, 510 levels, stop loss at 535. Would be a risk reward buy on Indigo with would keep a stop loss, a revised stop loss closer to 4130 and expect a bounce back towards 4250.
Kunal, what about your BTST ideas?
So I'll go with the buy on HUL. That's a chart which is looking attractive. At least looks like that the stock seems to have formed a base, and that major selling could now be over. 2450 as a target. Stop us at 2340. And the second would be a buy, more of a contra buy on L&T Finance. That's a stock which is on the verge of forming a bullish hammer formation. The stock is completing a breakout, potentially above its 50-day moving average. So if it closes above its 141 mark, traders could look at a buy with 146 as a target. Stop us at 136.
Okay, so that's the view coming in. L&T Finance as well as HUL. Still some of the buy recommendations coming in from our technical experts. But having said that, a lot of red on the screen, right from our Aditya Birla Sun Life AMC to IDFC First Bank to Nuvama Wealth Management Services, Piramal Enterprises, Loris Labs, CDSL, they're all down and out in the trading session. What's holding up in the green is Adani Wilmar that just came out with its earnings, so a bit of a bump up there. Federal Bank is holding up okay, and then Sumitomo Chemicals too is looking on the positive side. ICICI Bank has managed to inch up 1.5%. But Naresh, if you're looking for safe bets within the banking index, is ICICI Bank still the go-to name?
With Kotak Bank one and then HDFC Bank, purely for the fact that they've not been outperformers. ICICI Bank has been an outperformer in the last few years. And both these names have gone sideways for the last 4-5 years. And giving first indications of a trend change, multiple attempts around 1800 for HDFC Bank, 1900 for Kotak Bank. So if I have to hide somewhere in the banking space, this would be two large liquid names.
Okay, that's the take coming in on some of the banking names. Bank of India, though, is the one which is actually scaling the charts, much unlike some of the other mid and small caps today. Bank of India higher by 6.5%. Even Federal Bank has jumped up about 2%. And Yes Bank as well is seeing some move up, about 1.6% higher as we speak right now. Torrent Pharma too reacting to its numbers, going home with gains of about almost 3%, and LTF, like Kunal just highlighted, that also is looking strong. Other than that, of course, within the large caps, it continues to be an ICICI Bank, M&M kind of day. Britannia Unilever too holding out in the green. And then SBI, which is holding up by about almost 0.5%. It's flat for Axis, marginally soft for Kotak. That's pretty much the picture when it comes to some of the banking pack. But IT, that's continuing to bleed. You've got a Bharti, TCS, Titan, HDFC Life, DRL. They're all a pack of losers as we speak right now. And even Tata Motors, which is now at 713 on the futures, that's seeing a very sharp 3% cut ahead of its numbers later this week. Kunal, just a quick take on Nifty IT, because, you know, it's completely reversed the trend from last week.
Yeah, it's reversed the trend, and now this looks like more of a potential breakdown for the IT index. Yes, the confirmation is still yet to happen if the IT index breaks below 41,700 mark, but that could be just about 0.5%, 0.7% away from the current price for the Nifty IT index. And you know, when we look at this over the last 1 month, there were two major bounce backs for the IT index, but then in the entirety over the last 1.5 odd month, the pattern has been lower highs and lower lows. So we would now probably wait for that confirmation of a break below 41,700 for the IT index. If that happens, we could be looking at least another 700 to 1200 point correction on the IT stocks.
Okay, point taken. IT might just come under pressure, a bit of a reversal as far as the trend is concerned. But Devang, what about some of those beaten down segments? I mean, chemicals, for instance, didn't do much for a long time. Cement didn't do much for a long time. These are the pockets to watch out for now, or still stay away?
I think, yes, you made a relevant point that agrochemicals and specialty chemicals, all this have stayed out for a long while. And there was this news about destocking, as well as, I think, after a cycle of I can say good times, they went through difficult times for the last couple of years. I think during COVID times, they did extremely well. There is a glimpse of recovery when we talk to the managements. I think most of the pain seem to be behind us now. Just as I think Sumitomo Chemicals just came out with numbers that has been one of our portfolio stock, and I think we'll just deep dive into the numbers. But having said that, I think on the face of it, looks like good set of numbers. So mostly, I think this part of the industry which had suffered due to cyclicality, I think the next 2-3 years, this seems to be a good value which has emerged also for agrochemical as well as specialty chemical. And if there is something that into the agri side of the economy, as rural consumption also needs a boost, I think this again another sector which will sort of gain. So this is one sector which probably should be on the radar of people.
To have you then on the show, Naresh Kanal, we'll let you go on that note as well, and I'm going to hand it over to Snehi for the closing trades.
Well, absolutely. It's been a very poor trading session on D Street today. All the indices have been languishing away. A more than 1% cut coming in on the Nifty today. It's 270 points lower, and at one point we were very close to going below that 22,800 mark. We're somewhere around that point, but of course very far away from that 23,000 mark where we had opened just slightly below earlier in the trading session. Sensex also a 1.1% cut coming in. Advanced decline ratio very steeply in the favor of the declines today. So that's what has caused some mayhem on the street today. Nifty Bank also lower by 0.7%. ICICI Bank was the only candidate that has managed to be in the green when it comes to private large banks and Nifty banks rather, when on the back of its quarter 3 numbers. So 1.4% uptick for ICICI Bank coming in today. It's the broader markets that are taking it on the chin in today's trading session, because you have a massive cut coming in on Nifty mid cap, a 3% cut, and if you think this is the most, the small cap index is lower by 4%. So very big cut coming in on the entire small cap index. Sectoral, if you take a look, after Nifty Media, Nifty IT is the biggest loser in today's trading session. Of course, on the back of those DeepSeek news, AI news coming in from China, that has panned out very negatively for all of these large IT companies. A 3.5% cut almost coming in for Nifty IT. Let's take a look at the India VIX before we take a look at some other sectors that were losing in today's trading session, because India VIX saw a very sharp spike, an 8% spike. There you have it. 18 levels. We're once again back to those levels of 18 that we have seen very long time ago, but nonetheless 8% spike coming in on India VIX in today's trading session. All the sectors today on D Street have ended in the red. Of course, Nifty IT being the biggest loser. Nifty Bank was the least loser, held on to by ICICI Bank's good numbers. Then you have metal, pharma, energy, PSU banks, realty, auto and FMCG. These are your most to least losers in today's trading session. Big cuts coming in across LTI, Mindtree, Coforge, Persistent, HCL Tech. Laurus Labs is one of the losers in today's trading session as well. Big cuts coming on that front. AU Small Finance Bank was languishing away. DLF and GCPL, Godrej Consumers, were both in focus on the back of its quarter 3 earnings. A whole host of earnings reactions coming in. Interglobe Aviation was amongst those who also made it to that list on the back of its earnings. But well, yes, this is how we've ended today's trading session. Very close to the 22,800 mark. But that's it. A big cut coming in on Nifty. More than 1% cut is what we have seen on the intraday base just today on the Nifty.